U.S. stocks moving to the downside at the open as tariff risks does spur some selling on the street. Joining us now to break it all down, we want to bring in Callie Cox, Ritholtz Wealth Management Chief Market Strategist. Callie, I think a lot of investors are looking at the reaction this morning, a bit surprised maybe about how the tariff scenario played out over the weekend here. We talk so much about it, still seems to catch Wall Street off guard just a bit. What are the trades that investors need to keep in mind this morning here at the open?
Clearly, the trade is sell stocks here. And according to what I saw a few minutes ago from your colleague, this selling pressure is happening really across the board. And to me, that reads as something where people aren't asking questions first. They're just they're selling. And I think that's fair to do right now because tariffs have far-reaching effects across the economy. I want to remind people, though, we still have a good amount of time before these tariffs actually come into effect. And the news is moving so quickly. So I wouldn't be so sure that, tariffs are going to happen and are going to last for a while. But when I look at what's happening, Shauna, I have to assume that, especially when we're talking to clients who have those longer term perspectives.
Right. And markets usually try to look out into the future, months into the future as well here. But we do know for the tariff component, at least, I guess from your own kind of estimation and kind of looking back at previous instances where we've seen tariffs actually be enacted, what is that lag time like? Because markets are going to look out into the future, but the time to which the pricing actually filters through to the consumer and then has a longer ranging impact that the markets have to factor in, what is the calculus around that?
This is the tough part. We don't really have historical precedent for this severity of tariffs. Obviously, we have 2018 and 2019, but those tariffs were peanuts compared to what could come into effect tonight at 12:01 a.m. I don't think this is necessarily something to wring your hands about. I think, if you approach it strategically, you could find that you have some agency here, Brad. And what I mean by that is, right now the tariffs are targeted to be on Canada, Mexico, and China. I don't hear any developed markets or European markets in that list that I just rattled off there. And I know international stocks aren't the sexiest place to invest, but I think if you're, trying to target a hedge here, I think European stocks are the place to look.
That's interesting there, Callie. And then also, I guess you also have to factor in just how real that risk is that we could see tariffs implemented on the EU and then the pressure that could ultimately put on some of these European stocks. When you take a look at the strength that we're seeing this morning in the dollar, how problematic is that for some of these multinational companies?
Very. So short answer is very, especially with the dollar at a multi-year high. And we don't know if the dollar stays here, of course. It's been volatile. It's been very volatile lately. But when you think about it, the biggest companies that many of us own, the big techs of the world that are selling off hard today, pharmaceutical companies, industrial companies as well, they have a lot of exposure to international markets. So I think you have to be a little picky here. You have to understand exactly, what the tariff effects could be. I think the biggest effects will be on automakers. I think it'll be on, food production and resellers, potentially retailers. But, you have to be smart about this. And part of me wants to say that, we might not see a market reaction until we see these impacts show up in earnings. But we are in earnings season and the dollar has been strong for a while. So I think you have to be a little more skeptical and a little more hedged, heading into this particular round of earnings.
Callie, just while we have you here, a lot of investors that will try to flock to or seek out safe havens in a moment like this. Where do those opportunities and the safe havens at least emerge from your evaluation?
Well, if you're worried about inflation, you have to look at the tangibles, right? You have to look at gold. You have to look at, you have to look at, inflation-linked fixed income, for example. TIPS have had a really good 12 months, and I think there's a reason for that. U.S. bonds are holding up, or treasuries are holding up pretty well today. I'm not sure if that continues because, of course, there are a lot of questions around what this could mean for, the future of the systems that we rely on. But, I think gold is the obvious trade here. And, you really have to consider having a lot of diversification. We hate the D word, but a lot of diversification in your portfolio just because the effects of these tariffs could be vast.
Callie, since you did bring it up, the bond market's reaction, I think, has been a bit perplexing, confusing here, especially when you see sort of it being pulled almost in two different directions. What does that then signal to you?
Well, I'll admit it's been quite perplexing to me too. The 10-year yield has risen quite a bit because there have been a lot of questions around future policy from the Fed, from the government. I don't think tariffs quite help here, even though the 10-year yield is down about 5 or 6 basis points right now. I mean, there is that built-in uncertainty when, people are, looking at fixed income 10, 20, 30 years down the road. I think rates stay high here. I think that there's a higher base unless we see the economy fall apart or if we see the job market weaken pretty quickly, which is certainly a possibility. But I think right now you have to be smart about the duration risk you're taking, what maturities you're looking at in the fixed income market, how quickly you're investing that money out that you get, and quite frankly, looking at your cash levels, because 6 months ago, sitting in cash was pretty illogical. Right now, sitting in a little bit more cash might make more sense. But I also don't think you stop investing here. There are just way too many questions to do that.
Callie, thanks so much for the time here this morning. I referenced your chart that you posted on social media, of course, with the affected goods. So I appreciate you sharing that across social. Thanks.
Yeah, thanks for having me.
Absolutely.